Hello investors, and welcome to Kruse Asset Management's video chart of the day. My name is Stuart Kruse, and today we're going to be talking about Best Buy. Best Buy reported its surging online sales, so it's gapped up 9.5%, up 8.6 points. And you see this gap up here on this 5-day chart. Here's the S&P 500 in blue. Best Buy is in orange, and you see a humongous gap up here where the S&P is up about 1%. In the last 5 days, and Best Buy is up about 11% over the last 5 days. And coincidentally, year to date, those numbers are actually pretty close, where the S&P is up around 1% and Best Buy is up around 11.5%, 12%. So let's go back to the 5-day chart. And you see a nice gap up here on increased online sales. Now, what some investors might suggest is that we missed the chart or we missed the move, so no reason to buy because you're supposed to buy low and sell high, and we should have bought back here yesterday. But the reality is momentum tends to work when you're making investment choices. And while you might get a pullback, generally you get a pullback about halfway to cover this gap, and then it moves back up. So long term, this is actually looks pretty good. So we already showed you the year-to-date chart of Best Buy, but going out 1 year, you can see how Best Buy has done much better than the S&P, which is up 10%. Best Buy has tripled that. And over a 3-year chart, the S&P is up 31%. Best Buy, again, has come close to tripling it. And over a 5-year chart, it's quadrupled it, up 200% versus the S&P is up 50%. Now, these are nice returns, up 50% in 5 years, not too bad. But let's look at this in some context relative to some other internet darlings, let's say like Facebook and Alphabet. I'm adding Facebook as the line in red. And right now, Best Buy, let's just clarify this. Best Buy has passed Facebook. While Facebook has kind of held its own and did much better during the lockdown, these new reports with this recent jump up in earnings, Best Buy has outperformed Facebook and hasn't quite outperformed Alphabet, but coming pretty close. And if we go out over 3 years, well, Best Buy is the clear winner. And if we go out over 5 years, again, Best Buy has absolutely crushed those two internet darlings. Now, I'm not saying don't buy Facebook and Alphabet, because clearly they've outperformed the S&P and doubled and tripled those returns. But don't ignore value companies either. The point and the reason why Warren Buffett is so successful is he buys $1 of earnings at a discount. So let's see what that looks like. If we're going to look at the PE ratios of these companies, and I'm going to take a look at the absolute values of the PE ratios. Right now, Best Buy is the line in blue, Facebook is the line in orange, and Alphabet is in red. And so what this is basically saying is you have to spend $30 to buy $1 of earnings of either Facebook or Alphabet. And that means it's going to take, at this current earnings rate, take more than 30 years for Alphabet and Facebook to pay you back. Whereas Best Buy, it's only going to take 18 years. Now that's also a long time. But you have to wait for Facebook and Alphabet to grow into these earnings. And if they don't grow or they miss or there's a problem along the way, that stock will stumble. And if you look at Best Buy's PE ratio, it did get a little bit more expensive up in here in the 20s, but has pretty consistently stayed within the teens. And down here, where it was at 8, seemed like a no-brainer to buy. And that's what Warren Buffett does, is he looks to buy low-cost stock or look to buy $1 of earnings at a cheaper valuation. So, and clearly this strategy would have won relative to Best Buy, Facebook, and Alphabet. And Best Buy has been in Kruse Asset Management's QVP strategy, a quantitative value portfolio, for quite some time, because the whole purpose of that strategy is to look to buy $1 of earnings at a value and looking for growth. So what we do here at Kruse Asset Management is look at the data and try to invest with the odds in your favor. This is Stuart Kruse from Kruse Asset Management signing out. Have a great day.